Hello, everyone. Welcome to today's webinar. My name is Katie Ingersoll, and I'm the Director of Programs at SMU DataArts. I would also like to introduce my colleague, Dan Gordon, who's our Support Center Manager at SMU DataArts, and he'll be joining us in this webinar and helping with questions today. Thank you all for joining us today to learn about the changes we have made to streamline the cultural data profile and how these changes will affect your data entry. Today's webinar will be focused on the Streamline survey through the perspective of audited organizations. This will be a quick and brief exploration. Will only take about 30 minutes of your time today. Before we start, some quick housekeeping. We have a number of people here today, so I'm going to keep us on mute throughout the session. If you do have questions, we invite you to use the Q&A feature to ask those questions throughout the session. You can ask those questions at any time. Dan will be monitoring the Q&A throughout the presentation, and we will also take some time to answer questions at the end. We also have the chat feature. That's a great feature to use if you need to reach out to our team to help troubleshoot any technology issues you may experience. And finally, for anyone who may want to utilize the closed captioning feature, simply click the CC icon for closed captioning at the bottom of your Zoom screen to turn on those captions. If you need assistance with this, please also send us a chat. And finally, to get ahead of the most common question we get, yes, we are recording this webinar and we will send you a link so that you can review it later and share with your colleagues who were unable to join us today. With that, let's get started. So as we prepare for these upcoming changes, we have created 4 30-minute webinars that explore the Streamline survey and provide context for different types of organizations. Many of you were able to join us for our webinar on Tuesday, where we went over some basic information about the new survey. Today's webinar will focus on data entry tips for audited organizations. We also have 2 more webinars coming up, data entry tips for unaudited and organizations with under $50,000 in expenses, and a final session dedicated to the new narrative sections in the CDP. Each webinar will be recorded for you to review, and those recordings are available at the link you see on this slide. I want to start by returning to a concept that we touched upon in our webinar on Tuesday, which is striking a balance between the benefits of data and the capacity that is needed to track and collect it. As you probably know, our mission at SMU DataArts is not to collect data for data's sake, but to empower the arts and cultural sector with the insights and benefits that data can provide. As we were making decisions during the Streamline process, we were considering the benefits that each data point in our current survey brings in terms of the research, insights, and advocacy. But we were also balancing those benefits against the time and effort of collecting and reporting each data point that is required from participating arts organizations. So we've depended on feedback from our users, possibly many of you on this call, throughout this process to get this balance right. And we really appreciate any of you who participated for taking the time to give us your feedback. So that brings us to our goals for today's webinar. So we'll walk through the sections of the new cultural data profile with a specific focus on audited organizations. I'll provide some reminders of what is changing and not changing in this section, in each section. Some of this will be review from Tuesday's webinar, but it's never bad to review. We will also provide some specific data entry tips on some new or drastically changed areas, including special fundraising events revenue, expenses, and renewal rates. Before we walk through each section, I do want to take a moment to review the 3 different types of organizations that complete the cultural data profile. We have audited organizations, unaudited organizations, and organizations with under $50,000 in expenses. Each of these categories of organization will fill out a slightly different version of the survey. Today, we're focused on audited organizations. This is defined as any organization that hired an independent accountant or an accounting firm to audit or provide a review of their financial statements. Because these organizations have been audited, because you have been audited if you're on this call, you have additional data points to enter into the CDP. For example, you will be required to fill in the audit totals in the beginning of the revenue, expense, and balance sheet sections. And in the balance sheet, you'll enter your assets and liabilities in a 2-column format with unrestricted and restricted columns. If this is not you, feel free to join us next Tuesday for a look at the profile specific to unaudited organizations. But if you're in the right place, that's great. So let's get started. So we'll begin our walkthrough of the Streamline survey. We're going to start with audit totals. There's not too much that has changed in this section. All of the same line items remain in place in the survey. What's mostly changed is the placement of these items. So in the survey right now, you'll see these items in a single section at the beginning of the cultural data profile, but in the new profile, these have been moved to the top of each section. You'll find these audit totals at the top of the revenue, expense, and balance sheet sections. And the purpose of these totals is that you'll enter numbers taken directly from your audit, and these will be used within the error check to verify the accuracy of your data entry. So this concept should be familiar to anyone who's filled out the current profile. Let's take a quick look at these in the survey. Here we can see the audit totals at the top of the revenue section. And as a quick example, here you will go ahead and find the total operating revenue number from your audit and fill it into this line. Of course, one thing that you may know if you've done this before is not all audits use the same language or format. So the tricky part of this section is finding these totals in your unique audit or review. If you have any trouble, we have placed a link here in the new survey, which will take you to an article providing instructions, as well as examples of different ways these items are referred to in your audit and where they may be placed. You can also always contact our support center for any additional help in translating your audit to our format. Next, we'll take a look at the revenue section of the survey. I'm going to start by reviewing what hasn't changed in the survey. So we will still have these 4 sections that you see here: earned revenue, contributed revenue, investment revenue, and non-operating revenue. The contributed revenue section in particular has not changed very much. You will see most of the same line items in the survey. And overall, revenue is probably the least changed section in our survey, on our data profile. This is because the data collected in the revenue section provides a really great snapshot of the revenue model that keeps your organization sustainable. It also helps us to understand fundraising and earned revenue trends across the sector and is used very frequently in our research. And so for these sections, a lot has not changed. We've opted to keep a lot of this data. For these sections, even though they are not drastically different, I thought it might be helpful to review the basic process you'll go through to fill these out. So let's take a look at that. So the main task here, of course, for organizations entering data into the CDP is matching your audit to the CDP format in the revenue section. And there are a few different ways that this might work for you. So you may find that this is what happens with your audit. You may have less detail on your audit than is required in the CDP. So for example, if your audit lists all of your earned revenue in a single line item, you may need to look to your internal financial statements for more detail to fill out these specific earned revenue line items in the cultural data profile. Or you may find that the opposite is true. You may find that your audit has more details than is required of the CDP. For example, if your organization breaks out in your audit group ticket sales, single ticket sales, and admissions, you would combine all those line items together to report them in the single line item in the new CDP called ticket sales/admissions. Finally, the other thing that you might see is just different language and terminology. So for an example here, if your audit has a line item in the earned revenue section called touring revenue, that would most likely correspond to our line item called contracted services and touring fees. If this is the case for you, this last case where the terminology is slightly different between the CDP and your audit or review, remember that we do have definitions of each line item on each line that you can click on to understand how we define each of these line items in the survey. So let's move on to what has changed in the revenue section. So even though the earned revenue section still exists, we have reduced the number of line items. So you'll see line items that are at higher level with less detail between the lines. Here is a quick glimpse of the new earned revenue section. We also took a look at this on Tuesday. What this also means is that you may be more likely to use fields provided at the bottom of the section for any types of revenue that are not included above. So I wanted to provide some information about those fields. Here you can see one of those lines, attendee generated revenue not included above. So in the new survey, these other lines in the earned revenue section are further broken down into 2 ways. The first is this concept of attendee generated revenue. This is defined as revenue from additional spending by individuals attending your programs. So an example of this would be gift shop and concession sales, things that people buy while they're attending your programs. The second category that we use to break down these other lines is other program revenue. And program refers to revenue that is generated directly from mission-related activities. So examples of this might include non-fundraising event revenue. So if you hold a special event that brings in some earnings, but is not primarily for fundraising purposes. Consulting fees, if you do consulting as a part of your mission to strengthen other organizations' operations. Similarly, fiscal sponsorship administration fees, if being a fiscal sponsor is part of your mission. So why is the data broken out in this way in this section in the new CDP? Attendee-generated revenue is a concept that provides a more complete picture of earnings from program attendees. If you think about it, if you have people buying tickets and also spending on concessions while at your programs, all of that revenue is actually coming from the same group of people. And so there are instances where it can be helpful to analyze it all together. On the other hand, program revenue is a slightly different concept that helps to illustrate how much of your earned revenue is from mission-related activities. This concept is frequently used in our reports to grant makers. So we've designed the new earned revenue section so that we can still report and analyze the data with both of these concepts in mind, which is why you will see both of those line items in this new section. The other thing that has changed in the special fund is the addition of the special fundraising events line in the contributed revenue section. In the previous profile, and actually the current profile that you would fill out today, organizations were directed to report contributions from special events by source. So for example, if an individual gave a contribution at your special fundraising event, you would put that in the individual contributions line, or sometimes organizations would use the other line. In the new survey, we have added a new line specifically for special events. So just to take a look at what this means, we would define a special fundraising event as an event such as a dinner, a gala, an auction, a walkathon, or an event organized to raise funds to support the organization's activities. In order to enter this into the CDP, you will report this number as it appears on your audit. So some audits will report this number as gross and others will report this number as net. And so we'll ask you to indicate which way you have reported it in your CDP based on how it is represented in your audit. And finally, if you have reported a net figure, we'll also ask you to report the fundraising event expenses that have been subtracted to make that net figure. Here's what this looks like in the profile. You can see these lines. So you'll see you will report your special events amount. You'll tell us if it's gross or net. And then if it is net, you'll see a line to report your fundraising event expenses that have been subtracted from that revenue. I want to dig a little bit deeper into this concept of gross versus net. So just to provide some definitions. So gross refers to a figure that includes all revenue that was raised via the event. Net is a calculated number that would be all revenue that was raised minus expenses associated with the event. So it's important to keep in mind that your audit may report these numbers in either format. There isn't a specific rule for how audits must report this number. Your accounting rules will allow you and your auditor to make a decision about how to report this information. So in the CDP, we'll ask you to identify if the number is gross versus net. And if it is net, to report the fundraising event expenses that you have been subtracted from the event revenue. So I just want to give a couple of notes about where you can find this information. So your audit itself may identify whether the number is gross or net. You may see this line item labeled directly on your statement activities as gross or net. So you maybe just have the information in your audit. If it's not in your audit, your 990 is required to include this information. You'll find it in part 8 on line 8. But I just want to make a note here that if you are using your 990 to provide this detail, you'll want to make sure that your 990 reflects the same amount for fundraising events as your audit, as we often find 990s and audits follow slightly different accounting rules. So you just want to make sure that whoever has prepared your 990 has used the same figures as your audit reflects. Finally, you may also be able to consult internal records. Your profit and loss may have information about this, or you may have information from the event itself, from the event organizers. So why do we collect this data this way? So both of these numbers have their uses. They're both helpful numbers. So the gross revenue helps you to understand your total revenue for the year. It's a part of your total revenue picture. A net figure, on the other hand, helps your organization understand the bottom line for your event. Did you make money? Did you lose money? How much did you make or lose on your fundraising event? Now, both of these numbers are helpful for an organization to know and have access to, and organizations are going to make decisions with their auditor about the presentation that works best for them within their audit, since there are no specific rules about this. However, for the cultural data profile, when you fill the cultural data profile out and run a funder report, we do want your funder report to match your audit, which is why we're collecting the information in this way, where we ask you to follow your audit. At the same time, collecting those further details from you helps us to normalize this data for research so that when we're looking at total revenue or total special events revenue across multiple organizations, we're looking at the same numbers for everyone. Next, we will look at the expenses section. So again, let's start with what has not changed. So we've retained the 3-column functional expense format of program, management and general, and fundraising. We also still have a personnel and a non-personnel section. We still ask you to break out payments that were made to artists, marketing expenses, as well as digital program expenses. This last breakout is optional. I want to take a quick look at this section, and I want to share one note about the layout. While we still have the same 3 columns, I want to note that the order of the columns has changed. If you have filled out the CDP for many years, you know that right now the fundraising column is in the middle. In the new profile, we've switched the order so that management in general is first, followed by fundraising. This now matches the layout of the 990, and we do think more audits are presented in this way. So hopefully this will better match your audit that you're using, but it is a shift. So I just wanted to call everyone's attention to it to make sure you don't miss that. So what has changed in the fundraising, in the expenses section? So as we talked about on Tuesday, if you were at that webinar, the main difference in the expenses section is that we've made a drastic reduction in the number of line items in the non-personnel expenses section. Let's take a look at this. So here we can see that we really only have 3 specific lines that are left in this section: occupancy, interest expense, and depreciation. Let's take a look at how you might approach this new expense section with your audit. So looking at the statement of functional expenses in your audit, you will first enter any line items related to personnel expenses. Then you will enter in the 3 specific non-personnel line items we just looked at. And finally, you'll enter all your other expenses into that last line. Let's take a look with this particular audit. So here we can see that we can find the personnel line items at the top of this audit, and those would be entered into the personnel expenses section, as this user has done here. Next, we can see that this audit actually has all 3 of those specific lines that I mentioned: occupancy, interest, and depreciation. So your audit may not include all these line items, but if whichever ones you do have, you would go ahead and enter those into the CDP. Notice I'm continuing to use the 3 functional expense columns, which are available on my statement of functional expenses. So our last step will be to put the remainder of our expenses into this last line. And there are 2 ways we might do that. The first is to subtract. So if we start with our total expenses from our audit, and then we subtract what we've entered so far, personnel, and then the specific non-personnel line items that we just looked at, that will allow us to arrive at all of our other expenses, which we could enter into that final line. The other option, of course, would be to add. We could add together all the remaining line items we haven't entered yet. Which approach you take is probably going to depend on how many line items you have in your audit. If it is very detailed, you may find it quicker to use subtraction, but addition is also an option. It will get us to the same result. Note that you will want to keep the 3 functional expense columns in mind while you do this, even though I've left them out of my illustration here just for simplicity's sake. I also just want to give a final reminder that we do still have a non-operating expenses section as well. This won't be applicable to every organization, but if you do have non-operating expenses, don't forget to include them in this section so your total revenue will be correct, or total expenses will be correct. So why have we reduced the expense section in this way? As many of you probably know, expense details vary a lot between organizations. Each organization's operations are very unique, and organizations present their expenses very differently in their audits. And so for that reason, matching your expenses to the current CDP we know can take a lot of time for users. In addition, this data is actually not frequently used for research because it does vary so much between organizations. The line items and the breakouts that we have retained are fairly standard across organizations, and they're also all used in key financial health metrics or research, which is why they're still there in the survey. Next, we will look at the balance sheet. So let's again start with what hasn't changed. The basic structure of the balance sheet remains the same. You'll enter your assets, liabilities, and your net assets will be calculated at the bottom. You will also still enter your balance sheet because you're working from an audit in a 2-column format, unrestricted and restricted columns. So here's the new balance sheet, just to give you a glimpse. It should look fairly familiar. Let's talk about what has changed in this balance sheet. So there is an overall reduction in line items to include less detail and less specific line items. We've tried to combine items that are also frequently combined in audits wherever possible. So we hope the new line items will be a closer match to your audit. We have removed the detail sections, endowments, loan details, and fixed asset details. We have also retained, even though those detail sections have been removed, we have retained 2 specific lines: accumulated depreciation of your fixed assets and line of credit limit, or the limit on your line of credit. I did want to just make a quick note about where you can find those 2 specific line items that are still included. So accumulated depreciation, that you can find in your audit. It is a required disclosure in audits, so it has to be there somewhere. If you don't see it in the balance sheet itself, you may want to check the notes. Line of credit limit may be in your audit, but it is not required to be there. So you may also need to look at internal records related to your line of credit, potentially from your bank or that someone in your finance department might have access to. All right, next let's look at the workforce and workspaces sections. So what has not changed in this section? In the workforce section, you will still enter the number of positions of each type. And in workspaces, you'll still enter up to 5 workspaces. You'll enter the address and a few other details about those physical workspaces. Only 1 is required, but you can enter up to 5. What has changed? We are no longer collecting hours worked for each type of position in the workforce section. There is, however, a new column, which is called turnover. Here is a quick glimpse of what that section looks like. You can see the new turnover column that actually replaces the hours worked column here. So I did want to give a quick definition of turnover for you, which you'll also find on the platform when you're entering your data. This is defined as the number of employees who left their positions, retired, or were fired within that fiscal year. A couple notes here: you should include layoffs in this number, but do not include departures that were built into the position. So for example, if you had an internship or a fellowship or anything where you hired someone with the expectation that they would only work for a certain time frame, you don't need to include them in there in the turnover column. Okay, lastly, let's look at the program activity section. So what has not changed? So we still collect high and low prices for tickets, subscriptions, and memberships. We still collect the number of members and subscribers if you have a membership or a subscription program. We also still collect the number of programs that you put on of different types. And we still collect the number of attendees, though there is a change in the format here. We'll collect your attendance as one large number going forward in the new CDP, as opposed to specific numbers for each type of program. So what has changed? So first, when you log into the new CDP, you'll see one standard program activity section for all organizations. As you may have experienced with the current survey, we customize the program activity section based on the activities that you undertake, and there's actually 34 different sections that you could possibly get. But we've heard from people that it can be difficult to enter your program activity spread out between all those different sections. So we have gone a different direction with the new CDP, and we've standardized it so it's all one format for all organizations. Second, in the current profile, we mostly focus on in-person activities, with the exception of some fields about broadcasting. But in the new profile, you'll be able to report physical and digital programs for all of your types of programs. I'm going to take a quick look at this. We did go over this in depth on Tuesday's webinar, but this will be a little bit of review, or in case you weren't able to join us on Tuesday. So you'll notice that the in-person programs are on the left and digital programs are on the right here. For most in-person programs, you'll enter both the number of distinct offerings and the total number of times offered. So for example, if an organization had maybe one show that they put on that was distinct, but they offered that same show at 4 different times, they would report one distinct program and 4 times offered. For digital programs, you'll see that there's also a distinction between live streamed and on-demand programs. Live stream means that the attendees have to be seeing your program as it is being performed or taught. So this webinar actually right now, because we're all here together at the same time, is an example of a live streamed program. An on-demand program is something that is pre-recorded and can be watched at any time of the viewer's choosing. So we are actually recording this webinar, and the recording of this webinar will actually become an on-demand offering because you can watch it at any time. So what has changed in the program activity section? Another thing that has changed is the addition of renewal rates, which I do want to talk about for a second. These are optional. You won't have to enter these into your cultural data profile, but we do think that this is an important data point. So we do recommend completing it if you have a membership or subscription program. Here you can see the column where this would be entered. And we define renewal rate as the percentage of last year's subscribers or members that renewed in the current fiscal year that you're reporting on. In order to calculate the renewal rate, we'll first start by gathering a bit of data. You will need your membership data from the previous year. You'll look at your total members from previous year. And then you'll look to see the number of members who renewed for this particular fiscal year that you are in. To get the renewal rate, you'll take the number of renewed members, divide that by the total members from last year, and then of course you'll multiply it by 100 to get a percentage. So let's look at a quick example for example museum. So if they had 20 members last year, and then in this current year, 15 of those original 20 members renewed their memberships. They had 5 members from last year who did not renew. So what they would do to find this is they would just divide that 15 divided by 20. So the members that renewed divided by the total members from last year and get 75. Sorry, 0.75. And then they will multiply that by 100 to get that percentage of 75%. A quick note about where to find this data. I know that many of you who fill out the CDP might work in development or finance, and if you do have a separate person or team who works on memberships, I would recommend checking in with them. They may already calculate this number. Otherwise, the easiest way to get this would be to go to an internal CRM or constituent relationship management system, or a database, you might call it, to see if there are reporting tools that will help you do this year-to-year comparison. However, if you have a small membership program, maybe you track it using lists or spreadsheets or something more simple, you could also get this number by comparing the 2 lists from year to year. So why have we added this data point? This data point is significant because it provides a measurement of loyalty and retention. I know this year in particular, we have heard from a lot of organizations that they've had to rely on their most loyal supporters and patrons to get through this tricky time when they've been unable to offer programming. So understanding to what extent people are sticking with your organization year after year and building those loyalty and relationships is really important. And entering this data into the CDP helps us understand the member and subscriber patterns across the sector, which we can in turn share back to participating organizations to help inform your planning and strategy. All right, so just to wrap up, a few next steps. You can download a copy of the new profile at this link. We have set aside 2 weekends when we will be shutting down our platform in order to launch the new Streamline CDP. So Friday, December 11th through December 13th, and Friday, December 18th through Sunday, December 20th. You can log in on December 21st to see your data in the new format. And you can also attend the next webinars in our series, or you can watch the recordings closer to your data entry. So here is what we have coming up. Okay, so I'm going to, that concludes our webinar for today. I know Dan's been answering your questions throughout, but if you need to sign off, please feel free, but we'll take a moment to address any questions that have come up. So Dan, do we have any questions that I can answer?
Thank you so much, Katie. I do think that we can address some of these questions live. There's a really good question from Anne who asks, will you please send us a copy of the presentation? Yes, we're going to send all registrants will receive an email with this recording of this video. Also, Sheila asks, so in the example of this webinar as a digital offering, would you count it twice as a live stream and also as on demand?
Yes, that is a great question. And yes, it may seem a little counterintuitive, but we would count it twice because it actually takes different planning to make the program available in two formats. And that's kind of why we've provided so much detail there. So our research team can actually see, and in your reports, we can actually see what different formats you're providing your programs in, because of course that's become a place of a lot of creativity across the sector this year. So to answer your question, Sheila, yes, for this program and any program where you both put in the work to live stream it live, and then you also record it and make it available afterwards, you would count both of those as digital programs.
Thank you so much, Katie. The next question we have comes from ML, and she asks, for special fundraising events, would this be where monies from Giving Tuesday, Arizona Gives Day, or Facebook fundraisers would be recorded?
It's a good question. I think for that particular line, we are thinking more about in-person events or maybe an online gala. And so I think we are thinking more about a time-bound event as opposed to a campaign where you're asking people, individuals, to give through an intermediary. Typically, we would count the types of contributions that you're talking about in a few different places. If you are getting contributions directly from individuals, but it's part of a specific campaign, we would still count those as individual contributions. If you are getting contributions from another organization, or they're not coming directly from individuals, you may consider counting those in the other contributions line. But when we think about special events, we're thinking more about an event that has some kind of component that goes beyond just receiving donations. So you might think about a gala. A lot of organizations have had online galas this year, things like walkathons. That would be what we mean when we talk about special fundraising events.
Great, thank you so much. Here's one that I can answer. For organizations that already started to work on their survey, which is still in draft, before the launch date, would we be able to choose to keep the old format, or would the work in progress survey be automatically updated to the new format? The answer to that is it was going to be automatically updated to the new format. So you don't have to do anything differently. Our process will change it over to the new format for you. So you would log back in and you would see everything will be updated to the streamline format.
Great. And Dan, I do see the question from Beth here, so I'll go ahead and answer that. This is a question about an organization that's changed its fiscal year and has an 18-month audit. This does happen. So we always tell you to follow your audits when you're filling out the CDP. So if you have whatever the fiscal year that's represented in your audit, that's the one you would want to enter into the CDP. It is okay to have an audit that to have a fiscal year that is longer than 12 months in length. What we will do is we'll just mark that in your report. So when you fill out the CDP, just be very, very careful to mark accurately the end date of the fiscal year you're working on. Our system will recognize that it is not a 12-month fiscal year, and we will put a note in your funder reports so that when people are looking at the reports, they will be aware that they're not looking at 3 consecutive fiscal years of the same length.
Great. That is all the questions that we have pending.
Okay, great. Okay, well, I think we will hang out for a few more minutes on the chat. So if you have any last questions, feel free to put them in the Q&A. But if not, we'll end the presentation portion of this webinar. So thank you all so much for joining us. I'm going to go back to this. These are the webinars we have coming up in the next few days, so next week. So please feel free to join us for any of those. Specifically for this group, the CDP narrative questions might be of interest. Thanks, everyone.